Hello guys, welcome back to the channel Gyaan Valuable. Today in this video we'll be seeing the reasons why I do not invest in IPOs. I never support IPOs investing because there are some five practical reasons which I need to discuss with you that why I do not invest in IPOs, and I would also like everyone to think on these aspects and decide based on your experience of IPO investing. So let's start. So the first reason which I feel is the inflated inflations, the valuation. Inflated valuations is because the IPO, when you see the prices are so peak high, and when they come into the market in the secondary market, they just skyrocketed prices. So these are very abnormal and unreasonable things, illogical prices, which always impact the retail investors. So this is all the prices which are framed here. It's only based on the future growth aspects, which is a very long-term growth aspect, which is a very optimistic one. They think it's just like what you say. Over exaggerating the prices, but actually the business might not reach to that level, so it's just to make a sell. It's like a marketing practice which the company who is launching IPO, they practice. So they just hype the company name, and because of that many of the retail participants, they get stuck in that is the marketing tactics. So that is why I refuse to that is invest in the IPOs, because the valuations are very high. That is the first reason. Coming to the second reason, so there would any IPO listed company who is coming into the secondary market, they are no track record available for us to analyze what historical data are available, and whatever data which they post in the draft red herring prospectus, which is a document which comes up before the IPO launch. In that, they just give a summary of all three financial years, last past three financial years performance, which might not be as that is you cannot trust blindly on those records, because any company who go for IPO, they might manipulate their accounting records from that is for the past 2 3 years. They start manipulating their accounts. So that is what so they that makes a negative point on whether we should that is invest in that company or not. So you can see pre-IPO numbers may look attractive, but they are not actually attractive, and real performance only starts after listing, because after listing they need to report to the shareholders, they need to report to the SEBI. There are many regulatory regulations which are coming into play after listing. So any malpractices can happen before listing. So those historical data available before listing might not be you cannot trust them actually. So prefer companies who are tested by public markets. So that is the reason number two. Coming to reason number three, it's the promoters exit practice. So IPOs basically, they helps the promoters who were already invested in the company or the private equities to exit. So it's a path for them to exit by giving their shares to the retail investors. So this provide liquidity for them, and that's a red flag for us. So most of the IPOs, you need to be very sure, even though if you are investing, look those IPOs which are raising funds. That is, they are just issuing additional capital to invest in their business for expanding the future growth. So that is why, and if it is a offer for sale, that is any promoters is just selling off their share, and that's the reason for the IPO launch, then you need to ignore those types of option. That is the IPO applying to those IPOs. So these are the basic things. So it's all the promoters exit tactics. So that's the reason number three. Coming to the reason number four, it's the post listing volatility. So after listing, the volatility gets very much increased. The market finds the stock finds its price in the market between the buyers and sellers who are optimistic, who are pessimistic, and between that we need to be very we should stay out of those stocks for a period of time after listing also. So there is a lock-in period for all the initial investors, so they cannot sell the shares immediately after the company is being listed. So we need to wait until the lock-in period is ending. After that, the early investors, they will start booking their profits, and that will lead to a price correction, and that might lead finally to a better investment opportunity. So even though the company is attractive, the fundamentals are strong, there is a good IPO coming up in the market, you need to be very sure, patient enough to just wait for those opportunity to come, and those definitely come. I will show you the recent examples of the recent the IPO launches, so we'll discuss that. And the reason number five of not investing, it's there are multiple better opportunity available once an IPO comes in the secondary market. So there will be a historical data available for that company once it's listed. There will be better risk reward after corrections, and there will be an ability to buy proven businesses, because after listing, the company, the management, to prove their businesses, they prove their optimism when they were launching the IPO, will be decided only after some 1 or 2 years after IPO launch. So you need to be very that is watchful to those companies who have recently come up for the IPO launch. So I will see the example, recent examples. You can see here in this. I have taken Zomato's example, and here the year when it was launched is 2021 in the month of July, and after that there was price was stable here. Then there might be a sudden completion of a lock-in period, and the major investors they just started selling, and it was a crash from 153. It almost crashed 70%, and it came down to 42. So it was a huge crash, and after that the price got stabilized, and the businesses also started to perform good, and there were some profits being reported. So this is what I'm saying. Initially, just ignore it, wait for 2 years, and after that, if the company is attractive, and you need to be very sure that yeah, the company valuation, you need not wait for 2 years, but you need to wait until the valuations are reasonable, and that is what you need to learn. So the valuations to be reasonable, it's an art to understand. So that is what, if the price stabilizes, if the business is starting to earn profits, then there is a real boom started from that price, and it's been almost 10 that is almost 10 times. So it's almost 400, it has reached almost 400. So it's almost 10 time returns within next 2 3 years. Last 2 3 years it has grown fundamentally extraordinary better returns. So yeah, so this is what then one of the example, and another example, recent launch of Vikram Solar IPO. So you can see here again in this example, the company has launched its IPO in August 25, and now it has continuously been corrected. But the fundamental of this company is very strong enough, and it's into solar business, which is the manufacturing of solar panels, and it has continuously been falling from since the IPO launch, and now it is in a place where it is a very attractive valuation, and there is a strong buy recommendation from multiple brokers houses, and there might be some more connections because the market has started to correct, so that might also impact these prices. And so anything below 200 for this company will be a very attractive one, and this will result in a better results over the years, that is in the long term. So always invest in a company which is a good opportunity for the next 2 3 years, because in 1 year you cannot get extraordinary returns from any of the company, and that is what we need to be in IPO related companies I'm saying. So any IPO within 1 year, very rare, very rare companies are there. Like you can see IRCTC, when it was initially launched, from the date of IPO launch listing, it was just skyrocketed from that day. And even DMart, you can see there was an historical record there. It was from 2017 it has started to rise. So there are very few companies which have performed wonderfully well from the date of listing, but almost 90% of the companies have corrected after IPO launch. So that is what we need to be very cautious. And so in this case, Vikram Solar is a very good example, and we need to be very careful in this scenario. Now it has corrected. Now it is a very good place where you can accumulate the stocks. So this is what an example from my side why I do not invest in IPO on the date of listing, or do not I invest in IPOs. And the conclusion is here. So IPOs majorly favor sellers and not the buyers. Patience, always provide good entries, and always focus on long-term wealth creation. So hope I would have explained it properly, and you would have understood it in a nicer way. So it's all about your understanding about the IPO market, and also you if you have any questions, you can just put your comments in the comment section. And so thank you so much for watching. Keep stay invest that is subscribed to this channel. It's a Gyan valuable. Always click on the subscription button if it is not clicked. So for more good videos to come up in future. So thank you so much for watching, and thank you for supporting. Happy investing. Bye bye.